Hey, good evening, folks. I thought it'd be important to jump on today and get the daily housing crash update in. I spent the day at open houses and working with some clients. And so I did want to update everyone on mortgage delinquencies because there is no doubt that we've sat at historically low levels when it comes to uh, people behind on their mortgages over the last couple years. I mean, ever since COVID, really delinquencies, the folks that are behind in their mortgage payments have really remained at a almost a historically low level. So today, this evening, I'm just going to take a few minutes and update you on the mortgage delinquency picture. And this report or this information I'm getting is from the latest Blackknight report for November, and the links in the description below. But here's some top line things I'm seeing. Because if you are, and what I'm going to go over are the top line stats. I'm also going to talk for a second about foreclosures. And then for a couple minutes, I'll discuss, hey, what do you do if you're behind in your mortgage? What do you do? What options do you have? So I'm going to talk about that for a minute. So from a top line data standpoint, 3.48% of all mortgages right now are delinquent, according to Blackknight. So just 3.48%. And if you look historically, that is low, very low. So, we were in the high teens when it came to, or when it comes to mortgage delinquencies back during the GFC. We were in the low teen, or the high teens. So right now, 3.48%. We were in the teens, and so that's obviously a big change. However, that rate, 3.48%, is up 4.3% month over month and up 5.7% year over year. So the delinquencies are increasing. And if you look back, if you look at 60 days, who is late 60 days or more, that is up 12,000 individuals month on month. And it's actually the highest level since 2021. 90-day delinquencies is at a 6-month high, 90-day delinquencies. Now, just because the overall delinquencies are 3.48%, that's really not the biggest problem I'm seeing. The biggest problem I'm seeing is in FHA and VA mortgages. So those folks that have FHA mortgages, a lot of first-time buyers have those, or VA mortgages. If you served, for our nation, obviously hats off to you. We're extremely grateful. I'm seeing those mortgages also uptick in delinquency. So the when you look at FHA, we're up 9% year over year to 10.5% approximately of all FHA mortgages have some type of delinquency. Yeah, that's a lot. I mean, that's a pretty high amount, right? 10.5%. Now, if you look back in history, 2005, we were at 15% of all FHA mortgages were delinquent. So we're not there yet, but it's certainly increasing. There's no doubt it is. If you look back just several years ago, we were at 7% of all FHA mortgages were delinquent in 2017 before the pandemic. So there's no doubt that delinquencies are increasing in mortgages. They're not skyrocketing yet overall, but they are going up, pretty quickly when it comes to FHA and VA loans. VA loans are up 24% year over year to around 6% delinquency rate. I looked back in 2005, according to Blackknight charts, it looks like we were at about 8% in 2005 and 3% in 2019. That's when I saw the lows before the pandemic. So you're going from FHA being at 7% in 2017 before the pandemic, VA being at 3% before the pandemic, now at 10.5% and 6% respectively. All right. So what does all this mean when it comes to foreclosures, right? Because if you're delinquent on your mortgage, obviously foreclosure could be the next part of the process that you have to go through, unfortunately. But foreclosure starts, if you haven't been tracking this, you should. Foreclosure starts are actually down 5.4% year over year, and they're down 34% versus pre-pandemic. So we have, delinquencies are increasing, but foreclosures, the foreclosure starts, certainly the foreclosure completions, and the houses that are actually going through foreclosures are really low. That percentage is low. So let's talk about for a second why delinquencies are high first, then we'll hit foreclosure. So delinquencies are growing probably because of folks taking out mortgages when rates were higher, combined with property taxes skyrocketing and insurance costs skyrocketing. I'm going to do a video this week on insurance costs, but those have gone completely nuts, right? I think in the last 3 years, the stat I read this morning, in the last 3 years, you've got um, a 28%, I'm sorry, a 33% increase in insurance rates for homeowners, 33% rate. At the same time, home values went up 28% in the last 3 years. So you have insurance cost actually increasing faster than you do home prices or home values. So a 33% increase in insurance costs combined with a large increase in property taxes. About every corner of the U.S. is seeing a large increase in property taxes. What does that all equal? Equals a higher payment. And if you have a fixed rate mortgage, most people do now, a fixed 30-year mortgage, and you've been enjoying a low rate, over the last, several years, people have low rates. They locked in, 2, 3, 4, 5% rates. Your payment has been steady. It's been fine. Maybe your taxes go up a little bit, insurance goes up a little bit, but nothing huge. But then when you see a large rise in taxes, a large rise in insurance rates, that's going to change your payment substantially. And if it changes $300, $400, $500 a month, that's a big chunk. And so if you can't make that payment, that may be why you're seeing these delinquencies spike. Now, let's talk about foreclosures. So again, we know I said it a little while ago, but foreclosures are down year over year. They're down 34%. Foreclosure starts are down 34% versus 2019. So why are foreclosures still low, but delinquencies are rising? Well, one main reason is it takes a long time to go through foreclosure. Right now, the foreclosure timeline, according to Blackknight, is something like 700 to 800 days to go through the whole foreclosure process. And I do think there are probably, according to what I'm reading from the industry, it looks like there's a lot of just, mortgage modifications going on. Folks that are behind in their mortgage have options that may not have existed in 2005, 2008, 2010, when we saw a lot of foreclosures. Now, banks, for the most part, probably don't want those properties, right? They don't want to be home sellers. They want people to stay in their home if they can and make the payments. Dealing with foreclosures is expensive. It just is. In fact, and this is just coincidental, I spoke to someone today face to face at an open house that is what actually was in the foreclosure business. They actually helped banks process foreclosures, and they said that they're actually home improvement now. They're a home improvement company because there are no foreclosures. There are hardly any for them to even help with or process with banks. So we may see an increase in foreclosures, but it's going to be a while. And so when you roll all this up into a big, ball, what do you get? Well, if you're someone waiting on foreclosures in order to buy the deal of your dreams, if you're someone that says, "Hey, I remember back in 2010, people were buying houses for pennies on the dollar. I want to do that." Well, you can still find foreclosures maybe, but there's just not a lot out there. And so if you're waiting on foreclosures that, will wreck the housing market, I'm not sure we're going to see that for a while. And in fact, I think banks will continue to extend and pretend, modify mortgages, lower interest rates, maybe even forgive some of the loans for people, depending on your situation or depending on the borrower's situation, so that people can stay in their home, keep making payments. That's what I think will happen. But I'm curious what you think. So please tell me in the comments. And, you know, we don't want to see anyone be delinquent on a mortgage. We definitely don't want to see any foreclosures. That's not fun to be involved in, but it is a necessary part of the process. It just doesn't seem like the banks, the current administration that's going to, or the current and new administration that's going into the White House, I don't think they want to see a wave of foreclosures. And I think what banks will do is just, you know, modify people and keep them in their houses if they can. So if you're someone who is behind in their mortgage payment, if you're someone who looks ahead and says, I'm not sure I can afford my home coming up, what do I do? Well, don't ignore it. That's the first thing. Communicate. That's the second thing. Communicate with your lender. Call your lender ahead of time and say, hey, I'm having problems making my payment. I'm struggling. I need help. Please help me. Most banks, I would think, have, and lenders have some type of program to help you, whether that be forbearance, modification, what have you, in order to help you get out of the bind or buy you some time in order to get your maybe more income. But regardless, don't ignore it and don't wait till the last minute. Communicate, communicate, communicate. The other thing about foreclosures, obviously, is that equity. When you think about equity, we've got what? The average homeowner has $300,000 in equity in their house. So with a bunch of equity, there's not going to be a foreclosure. But that brings me to my point on, if you're behind on your payment, don't just let your house, you know, be foreclosed on because you're not making a payment. If you can sell it and cash in some of the equity and pay off your loan, maybe that's what you should do. So work with your bank, get ahead of the game, and certainly communicate with them to make sure that you're not waiting till the last minute, because that would be bad. So get with some professionals and see if there's some options. You know, get a realtor out there to your house to look at your property and give you some type of value assessment. Maybe it is time to sell. Maybe that would help you now. And you know, even though there has been a large increase in inventory, we're still way behind where we were pre-pandemic. So I would definitely take advantage of the market now. If you can sell, get out from underneath your high payment, do that. But anyway, that's what's happening with foreclosures. Briefly, that's what's happening with delinquencies. I wanted to get this update out before the end of the weekend, but tell me what you think in the comments. And we will see you tomorrow morning on the next daily housing crash update. I'm out.